लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो यो हनी सिंह, दिस इज माई स्टोरी।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think
Budget 2026, the growth agenda.
All right, there is so much happening on the global front on a Sunday while our budget is on, and arguably the most landmark thing is the India budget coming this Sunday. But there are some lines that are coming in from agencies which I would want to bring to our viewers' notice. US President Donald Trump is saying that we've started a negotiation on Greenland, and that is fine. Iran is talking to us, etc. They're welcoming China to buy oil. But more importantly, he's also saying that India will buy oil from Venezuela, quote unquote US, and not from Iran. Now, if all of these and everything that has happened in the recent past are statements around, if I can use the term, thawing of a relationship, I think all of this is welcome. Remember, India has walked the path of being true to its own self, not antagonizing anybody, being diplomatically very, very correct, and therefore all of this is welcome news. But let's go across to my colleague Rishabh Bhatnagar, who is joining us live from Katulya Bhavan in New Delhi to list down what is the finance minister's agenda today in budget. Rishabh.
Absolutely, Neeraj. What we're looking at is, and given the sort of hints that the FM has dropped over the past year or so, there's 4 major areas that we think that the budget could touch upon. Let me go one by one. First one is, of course, the customs overhaul. That is something that the finance minister has repeatedly said over the past few months, that the next sort of big bang reforms will come in the form of a customs overhaul. So expect a lot of simplification, a lot of digitization digitization to come into that sort of into customs, and CBIC is expected to bring out a lot of details when it comes to a sort of a digital first approach to customs within India. The second big area is of course deregulation. That was the theme of the previous economic survey of 24-25. That is something that the government is expected to push on in this particular agenda. You've seen a lot of decriminalization happen via the Jan Vishwas Bill 1.0, 2.0. Might as well expect it 3.0, given the fact that there are about 275 to 300 clauses that are set to be decriminalized when it comes to ease of doing business also. The third one is, of course, the export sort of measures that the government wants to put out. The global scenario is very much out there. Everyone knows the sort of uncertainties that an emerging economy like India has to deal with. The additional pressure of tariffs is, of course, always there. So the export promotion scheme could also see a lot of additions, could see a lot of help for Indian exporters to actually navigate these troubled times. The fourth area is, of course, the Swadeshi push. That is something that received a fillip in this year's economic survey. The chief economic advisor was very clear about Swadeshi being a legitimate policy way ahead and not just a gimmick word that is thrown around. So manufacturing in India for the world is something that the government is looking at. A couple more very interesting stories that we did. One is, of course, on the banking corporate governance bill, and one on the definition of startups being expanded. Those are two interesting areas that could be touched upon.
Got it. Rishabh, thanks so much for joining in and for giving us that perspective. Of course, you are at where all of the action is, and we'll keep coming back to you as and when we need to. And, so far today, we've gotten you views from, of course, market veterans and the who's who in Indian markets. But we've also given you a little bit of perspective from what our editorial think tank thinks as well. And to that end, let's bring in Nisha Poddar, who touches base with so many corporates on an ongoing basis. She is executive editor corporates at NDTV Profit. And so let me ask you, Nisha, what are your expectations based on the conversations that you've had heading into budget?
These are unusual times, and corporate India is looking out to the government for that support that is required while there is a global tariff war, and also protectionism is the wave at the current moment. Government has taken many steps, but a lot more needs to be done. So the industry, India Inc., really looks up to the government to bring in favorable policies and also open various markets for the exporters as well as manufacturers. The first one is indigenous manufacturing, so that we are not dependent on the outside world, and also supporting innovation in the new age tech era where semiconductor, battery facility, EV as well as AI are all the new buzzwords and the new sectors of the future. But for any private capex to really pick up, policy certainty and also easier and smoother processes are very critical. Industry looks up to the government for that. Tax efficiency, as much as that is important, tax certainty and no flip-flop on that, and also easier tax resolution are some of the critical aspects where the government has been working and has been evolving on that particular front, and more needs to be done over there. So speedier resolution mechanism when it comes to IT, GST, customs duty. And remember, customs duty is becoming now more important with export and tariff being talked about so much. So export framework and customs alignment to support our indigenous manufacturing is one of the key asks. And also momentum is building in a tech new age era for API driven customs system, which means application programming interfaces where all the parties have the clear view and transparency on the various transactions being done. Managing the transition to the new income tax regime is also one important ask. Funding and incentives to support the early stage and growth of MSME. And MSME, remember, requires a lot of support from funding to incubation to also later support. tax credits as catalysts for the green investment and low carbon R&D is also very important, as globally carbon credit is something that the manufacturers have to really deal with as a cost increase. Now, when we talk about the startup space, which has become a big portfolio also in the market from India Inc., the founders clearly want ESOPs being permitted to them as one of the big asks coming in from startups. And besides that, many other tax efficiencies and re-domiciling also coming in with easier effort. So ease of doing business and speed of doing business are two clarion calls coming in from corporate India from this time's union budget.
Well, thanks for that, Nisha. And of course, we'll be in touch with so many corporates during the course of the day. You will hear Nisha in conversation with some of those as well. But let's move on to more market guests. And keep in mind, very soon, we'll get you a conversation with Kush and Parag Bhai about the stocks that matter today. But let's get an important voice before that. Dheeraj Relly, MD and CEO of HDFC Securities, with us on the show. Dheeraj, great having you. Thanks for taking the time out. Do you expect this to be a game-changing budget, or status quo with a slow trajectory is welcome in the current scenario?
I think in last 10 years or so, budget have been relevant to the industry, and they've been responsive. When it was required to be capex oriented, I think they did a lot of heavy lifting on the capex side, and in the last 1 year or so, when government realized that the consumption is an area where they need to focus, so they did in the budget and outside the budget efforts to increase the consumption. To that extent, I think last year they did massive reforms on the taxation side. I believe this year it will be more an incremental and non-event budget, so we can't expect much fireworks from the budget. But having said that, nuances will show you that they are absolutely bang on in terms of their understanding of economy and industry requirement. And that's what we will be looking forward to read in the fine print.
All right. Got that, Dheeraj. Alex here, by the way. Good morning to you. So from that perspective, obviously you cannot necessarily say buy this or buy that from the budget's perspective. But assuming that what you're saying does pan out, how should investors plan their portfolio selection?
I think investors should continue to do sector rotation and should continue to focus on the sectors where they see better earnings probabilities. To that extent, I think the consumer discretionary, consumer space are the spaces for investors to look into more, rather than, focusing on the more capex related or an industrial side. So banking and financial services is another sector that hasn't done well in last year or so. I think that's another sector that will do well, more so in the private sector and public sector bank both. I believe that FY27 will be a game-changing year for the BFSI space. And I am including here capital markets also. We've seen that in last 18 months or so, lackluster activity in the capital market side. So, next year, FY27 is going to be a good year. I'm not focusing too much on the budget here, but I can tell you the earning quality will be significantly better. And some of it will be indirectly attributed to the initiatives taken in the budget, and support come from the budget also.
All right, Dheeraj, that's a pretty comprehensive list. Thank you so much, as always, for taking the time, especially on Budget Day.
Thank you.
All right, let's talk about the relatively near term, though. And for that, let's go across to Kush for his picks on Budget Day. And these are things that you can transact, of course, despite it being Sunday. What is on your list today?
Sunday special.
You just had to rub it in on Sunday, right?
But look at how much fun we're having this
Absolutely.
morning.
No. Studios are always fun. I love it. So as far as budget goes, look, the way, if I can just quickly share, the way I've analyzed it, whatever has had traction without any other announcement, be it earnings or anything, right? So three sectors that stand out for me: cap goods, power, and housing finance. Now, some picks from these spaces: L&T, Torrent Power, and Samman Capital. Let me just give you levels for those. L&T for levels of 4,050 and 4180 with the stop loss at 3820. Torrent Power for targets of 1405, 1425 and stop loss at 1365, and Samman Capital at 155, 159 and stop loss at 147. So the idea is that there wasn't any earnings momentum or any other news. They just have very heavy, very healthy volume action, in most cases price action also. So there is some excitement leading into the budget. Any kind of positive fillip and you will see these stocks rebound higher from these levels.
Parag bhai, from the things that have come out, banks, right? IDFC First Bank, decent quarter. DAM Capital raised the target price to 100. Bank of Baroda, significant quarter, right? 14 quarters of plus 1% ROA. A lot of other positives that have come out. What have you made of the banking results that got announced?
So basically, IDFC First and Bank of Baroda were okay results in my view. Not so great. BOB NIM declined actually QOQ, and that is what I feel that ICICI Bank we should. That is why it is a thumping the table buy for me, because see, even PSU banks.
But a lot of target prices have been raised.
Yeah,
in Bank of Baroda,
because the loan book, the business update came, and the loan book growth was already strong there. So the loan book growth was strong, but deposit growth was not that strong. But in terms of this banks are at 3% kind of NIMs, right? And ICICI Bank is at 4.3, and they are still saying they'll remain in that range. So in a environment when repo rates are getting cut, to maintain 4.3% NIM, it's itself a very difficult task, and that is what they are managing with best credit costs. So their cost of fund is lowest, by the way. So I would say that right now I am in. Of course, it's again a contra view that everybody is right now on PSU banks. Within PSU banks, I would just go with SBI. And otherwise, ICICI and HDFC Bank are my list. Plus, don't forget, today's newspapers talk about that Mr. Shetty is requesting that deposits have to be taxed in parity with equity. If something on that sort comes, like deposit becomes more attractive investment, that will be great for banks if it comes. But I'm not sure.
Will that not benefit PSU banks more?
No. So all banks.
All banks.
In fact, it will benefit higher. Maximum benefit will go to high CD ratio banks like HDFC and Axis.
Okay, so that's the call on banks, but we will get more budget calls from Parag Bhai this morning. Let me go across to Somit Sarkar, where the dealing rooms are open. It's a strange Sunday, Somit, when we have to hear the chatter from the dealing rooms. But what is the buzz there?
Well, it's one of a kind Sunday where we are working and the markets are open. A few stocks that dealers have highlighted. Firstly, it's BSE, and even the share price move is kind of reflecting that the buzz on the street is that there could be a hike when it comes to the securities transaction tax, that is STT, on option trading. So keep an eye out for BSE. The second one on the street is Apollo Hospital. Now there are buy flows on institutional desk. Both foreign and domestic institutions have been accumulating this counter. For Paytm, the stock was down in trade on Friday despite a decent set of numbers and strong commentary coming in from management. Dealers are indicating that few hedge fund managers who had long positions were squaring off those positions, and that's the reason we had seen this weakness coming in when it comes to Paytm. Samman Capital was another counter. The stock was gaining for the last couple of trading sessions, and the buzz on the street is that the RBI approval is expected to come in the next couple of weeks, and hence these buy flows coming in when it comes to Samman Capital. And GAIL was part of a segment on January 29th where we did indicate that there are sell flows and dealers are expecting a weak Q3 numbers. And yes, the company has reported one of the weakest Q3 numbers. In fact, the petrochemical losses stood at its highest at close to 350 odd crore rupees in the third quarter. Interesting set of stocks. Somit, thanks so much for that. And we have a lot of conversations lined up. In fact, we're joined by Sanjay Parekh, who's the founder and CIO of Soham Asset Manager. Sanjay, thanks so much for joining us as always. Viewers, you'll have to wait just a tad bit to hear what Sanjay has to say about his expectations for budget, because we have to slip into a very quick break. But do stay tuned.
Budget 2026, the growth agenda.
The NDTV Golf Pro-Am, in partnership with PGTI, comes to you from the heart of South Mumbai at the historic Willingdon Sports Club. The city's classic layout provides the ideal canvas as India's finest golfers share the fairways with the country's top corporate leaders. Mumbai style. Watch at these heights.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर।
Budget 2026, the growth agenda.
Welcome back. There's non-stop and the most extensive coverage right here on NDTV Profit, where we're talking about the budget, what to expect, and so much happening around the budget. Just in the last hour, we've broken the story about the major reforms that could be announced in the budget. Trump has come and announced that India will now buy more oil from Venezuela, and of course, the silver gold crash. All of that being covered this morning. Sanjay Parekh, founder and CIO of Soham Asset Managers, joining us now. Sanjay, very good morning to you, and thank you so much for coming in. I'm sure you're also looking forward to what comes in this speech. What will be the highlight for you? And let's assume that this one demand of long-term capital gains tax being eased does not take place. What for you will be the important message you're looking out for?
Morning to all the viewers. So, I think our Honorable Prime Minister has set the, stage of reform, perform, transform, So, I think those, and then, our Prime Minister is a man of few words, but it has a lot of meaning. So, I think, coming on the budget, it's not only the capital markets, it's a broad section they have to address, each of the sections in India. So, with that context, one, clearly, what are the exemptions? So first is the fiscal deficit roadmap, the debt to GDP roadmap. That I think by and large, broadly the consensus that we will continue there. Then, there are a few E's, what I call, the first is the overall earnings growth, which is missing. It will have to help to accelerate earnings growth. Then, the second E, I would say, is ease of doing business. Third E is execution. Fourth E, which is very important, is exports now in certain segments, certain sections. And then, of course, education, which is the longer term for pillar. So I think these are the areas that they will have to focus. And I'm sure most of this would be addressed in this budget.
Yeah, not that any big portfolio calls are made on budget day or indeed the couple of days before. But having said that, between a consumption push, which has been the focus in FY26, and a capex push, which would be infra plus defense and all of that, what do you think is more likely this time around? And from that perspective, has that colored the construction of your portfolio?
Yeah, so I come to a construction of portfolio, but I think on the consumption side, they've already done the heavy lifting in terms of GST, direct taxes. They were all to propel consumption. This, of course, they'll continue that, through the rural schemes, the execution of them, the proper impact that those schemes create, the implementation roadmap. So, of course, all those will matter. But capital goods and overall capex will continue. So I'm also in the camp where there will be a growth at least of 10-12% in capex, and we have that leeway in our budget to have that sort of spend. So that will continue. I think the only missing link is and that's not a part of the budget, is the state spend and effective spend and not moving to populist schemes. So that is one where center can nudge them through some schemes, so through some carrots and sticks. But how do states effectively spend where the multiplier is higher? That is very critical, which is missing. Last year also, if you see, the center did a heavy lifting, RBI did a heavy lifting, but the states did not contribute to growth in a meaningful way.
Yeah, important points that you're raising, Sanjay. Thanks so much for joining us on Sunday morning, and I'd be keen to find out what you have to say even after the speech. So we'll be in touch. Thanks so much for joining us.
Yeah, have a nice day.
You too. All right, let's talk about a few stocks that you should keep on your radar. And these are pretty much straightforward if you think about it. Larsen & Toubro, Siemens, Ultratech Cement, all of these and the extensions of these, of course, the sectors that they belong to. Watch out for capex announcements, and that number is going to be critical to watch. And within that capex announcement also, the carve out for defense is likely to be higher. And you saw earlier the week as well, where the defense back as a whole rose 7% on one trading session. So watch out for HAL, watch out for BEL, watch out for the extended defense plays as well. Kaveri Seeds, Avanti Feeds, there could be a sector promotion there, because remember, agri-commodities and agriculture could well be a thrust in this budget, as is the case in quite a few budgets in the past. KPR Mills, Wellspun, remember that the external front is where a lot of focus has been running up to budget today as well. So beyond even the listed players, you could see measures for textile smaller players, and a lot of them in the MSME space. Watch out for that. Shakti Pumps, the Kusum policy extension is eyed as well. Dixon Tech, Amber Enterprises, from the perspective of a PLI push. You've heard commentators speak about the importance of giving a boost to manufacturing and increasing the share compared with manufacturing and services. This could be a beneficiary. Aavas Financiers, Aadhar Housing Finance, and a few others as well. A high allocation could be there in certain schemes. Remember, a lot of financiers also in the affordable housing space. You should watch out for that if that does come about. Adani Green, Tata Power, and Wari Renewable as well, on account of the boost expected in solar irrigation pumps. HBL Engineering, Titagarh Wagons. Of course, this is something that you will always watch out for. The railway-related plays, whether there's a significant carve-out and increase in the railway spend this time around. Consumption stocks as well. You should keep an eye. If at all there are tax cuts, and of course your pocket benefits, apart from the stocks that I've mentioned. On the downside though, because of the fiscal room that needs to be created, if there is an excise duty hike of more than 2 rupees per litre, this would be negative for the oil marketing companies, and you have quite a few there. IOCL, BPCL, HPCL would be front and centre. And BSE MCX likely to be impacted by something that we've heard on the street. So Amit pointed this out to you a couple of days back. There is buzz that there might be an increase in the transaction charges for derivative trades, and that would be a negative for the BSE. And also the soon-to-be listed NSE, if you think about it. But let's talk about stocks that you should watch out for from Chandan Taparia's lens, and he's joining us this morning. Chandan, thanks so much for taking the time and for joining us on Budget Day. Exciting time, Sunday. A lot of people getting to trade on a holiday. What are you looking forward to, and what are the opportunities that you see?
Good morning. Thanks for having me. So wishing everyone a happy budget, to the entire team and all the viewers. So talking about the market, the good part is that index formed the multiple base near 24,900 mark. So if that is respected, I believe recovery could be there. But on the upside, it needs to give a decisive breakout about 25,750. So we need to play the range between 24,900 to 25,750. Talking about the stock specific idea, I believe selective sectors will do well. I'll focus on the defense as a theme because the sector has given a consolidation breakout on the daily and the weekly chart. In fact, the entire Nifty CPSE index is also doing well. So defense and CPSE are on radar. So recommending to buy on BEL as a first top ideas for the day, with the view that today's breakout could be there, and we are expecting some more allocation into the defense budget. So this counter can do better. One can buy with support of 438, and BEL can head towards 470. One more counter from the defense is MTAR take. We have seen a massive consolidation breakout on the yearly, monthly, weekly, and the daily chart with significant surge in the trading volume, which can drive the momentum. So one can buy with support of 2840, and this defense name can head towards 3130. One more trading ideas. I'll focus on SBI, and we are recommending this counter from last couple of days. In fact, through 2 or 3 days back, we recommended near 1045. Still, we believe momentum could continue. One can keep the trailing support of 1053, and this heavyweight PSU can head towards 1100 plus kind of level.
Okay, so let me just recap that. BEL, MTAR, SBI, Chandan's 3 ideas. You want to add to that, Kush? And would BEL make the cut if you have a defense play today?
BEL I'll hold back on. It's had a good run, consolidation a couple of days. MTAR Tech, I like as well. I think it was Friday or Thursday we discussed this. Definitely there's a breakout. This is the one that you can keep on your radar. Any kind of a pullback should be taken as an opportunity to go long.
Okay, so much happening this morning as well. This latest comment coming in from US President Donald Trump, who says India could now start buying oil from Venezuela instead of Iran, claiming a deal has already been agreed upon. Listen in to what he said.
We've already made a deal. India's coming in and they're going to be buying Venezuelan oil as opposed to buying it from Iran. So we've already made that deal, the concept of the deal.
All right, it's all about updates and breaking news here on NDTV Profit this morning. And we're getting you the inside scoop on what is coming. We already told you about the major reforms that will be announced, but what is going to be the focus and tilt of the budget? Shimi Chaudhary joining in with more information.
Tamanna, so as part of Reform Express, as we have been reporting, you will see a lot of focus on boosting both domestic and foreign investment. That will reflect in the FM speech, which we will hear shortly. In fact, there will be a Swadeshi push. You can have that mentioned multiple times, is what my source is telling me, in the budget speech, in line with economic survey. And remember, economic survey kind of highlighted that intelligent import substitution should be there and shouldn't be blanket protection. Custom duty overhaul, as we have reported, fast clearances and rate reject. But couple of, focus area will be on, gold and silver. What we are picking up that could be announced, in the budget. And then over 100 key products may be targeted to cut import dependence as part of strengthening the domestic manufacturing is what we are hearing. On the tax front, you could perhaps see announcement coming in on joint income tax return that could be introduced. This has been in talk for some time, and announcement could be made in the budget speech. Capex push to continue and can exceed 12 trillion mark is what my source is telling me, and in fact, state support in terms of spending, etc., will continue. Lot of focus you will see, Tamanna, on MSME credit as well as part of ease of doing business. In fact, export promotion framework will be tweaked. You will see an entire overhaul could be, expected to be suggested by Finance Minister, where you will see the part of deregulation and the criminalization could be there. So these are the main focus area you will see in the budget speech, Tamanna, which we will hear shortly.
Okay. Thanks, Shami. Thanks for that, and much appreciate that as well. Guys, I don't know how you guys think about it, but in some sense, we've at NDTV Profit have termed this as the budget which needs to focus on growth, right? The growth agenda is out there, and because the nuance around growth is difficult, right? In some sense, we're seeing credit growth, etc., starting to pick up in select sectors, but we're not seeing an all-round growth. Does the budget therefore try to make that? Is that the key priority? That try and broaden the base of growth so that while certain sectors are feeling growth and the rest of the country is not, do we actually do that? And what is it that the budget does in terms of policy initiative for that? I wonder if that is going to be the key agenda of this budget.
I think that a lot has already been done on consumption, and there is a lag effect that takes place. People are spending, but it's going to take a little time for them to understand the impact of last year's budget cuts. a lot of people that we've spoken to in the run-up to budget as well, Tamanna, are not clear how much of an impact is it on a monthly basis, right?
No, but it got
monthly math,
yeah, but it all got squeezed in because remember, while headline inflation numbers are low, all your other services inflation etc. has gone up. There you have it. It's this beautiful red sari this morning. I always track what sari Finance Minister Nirmala Sitharaman is wearing on budget. This is a gorgeous one with the famous Bahi Khata. Their 9th budget. She's become the only finance minister to have the longest number of consecutive budgets that have been announced, and there you have it. That's the money shot, as we call it in the business. I think just taking a cue from what Shrimi just told us, it's an important point, and I'm going to come to Parag Thakkar on it as well. This Atmanirbharta portfolio should be ready on your fingertips right now. They're going to try and cut down imports for at least 100 items, everything from defense to medicine. I mean, we're in a time when you don't know if you can even import anyone's chips, semiconductors, tech. What can you trust? And you've seen that around the world. What really can you trust coming out from anywhere? Anyone can turn hostile anytime.
Yeah, absolutely.
What would an Atmanirbharta or a self-sufficient portfolio look like?
So basically, see, one is a broader. First of all, I would like to touch upon one thing which you very rightly said, that she will be the first finance minister to give a 9th budget, right?
Yeah.
So that talks about India's political stability.
Yes.
You remember between 90 and 2000, how many prime ministers changed? Right now, we have a stable political environment. We have got a very good macro, current account deficit, fiscal deficit, low inflation, at least on paper. And I would say that for FIRBI, FIS have become so much short on India, and they have used it as a hedging tool. I don't think India deserves that kind of a treatment. And I think my focus will be at this budget, and I think now whatever sound bites are coming from Mr. Trump, and yesterday Honorable Piyush Goyal ji said that he is very optimistic about the trade deal. I think all this should result in reversal of this short India trade. Kuch bhi kharido aur India becho. I think that should end now.
Okay, so if that ends, what is the Atmanirbharta portfolio still, Parag? What
so
would
basically,
you do?
see, I'll tell you, broadly I can tell you defense, rare earth minerals, all things.
Semicon?
Yeah, correct.
PLI scheme
scheme for
beneficiaries?
semiconductors, PLI for...
So what stocks do that translate into?
But yeah, so that is a problem. You do not have the, because most of these themes have rallied or actually are not right now available. It is just a narrative. For example,
so a Dixon, a Sirma.
No, that's okay. The stocks have fallen, and so somebody might consider it. It is not in my shopping list, but I would say that these stocks will benefit. But see, remember, memory chips prices are going up, and so all those things you have to keep in mind, right? So you cannot just construct a portfolio on narratives.
Actually, the thing might happen is that the PLI schemes name can now get announced for completely different set of companies as well, sectors as well, where maybe the Dixons might not be present.
Unka ho gaya hai.
Unka ho gaya. Or the point I think one of you was making, right? A sunset clause, do we see a revival of that because these companies want it?
Yeah, no, we were having that conversation. I was making the point before we were speaking to, hoping to speak to Dixon. All right, the big voices all here on NDTV Profit this morning. Ace investor Madhu Kela with us. Madhu, very good morning to you, of course, founder of MK Ventures. Thank you so much for speaking with us as we're heading into the run-up to the budget. This budget, are you looking at what Trump is saying? Are you looking at silver gold, or are you waiting to see what Finance Minister is saying? Which one has become most important?
No. Good morning, and it's a big day for all you guys. Wishing you all the very best. I am sure you will get the best for your viewers during the day. You will get the best for your viewers during the day. I would say I've never looked at silver and gold as my way to live life. I feel it's always been an asset allocation instruments, and I continue to maintain that for all retail investors, you have to not jump in and jump out, but you have to consistently follow the asset allocation model. Some assets in some particular years will do well, but if you follow the asset allocation model, you will continue to do well in all weathers. So for the budget, I would say the continuity should be maintained or will be maintained. Rather, I think government will continue to have fiscal prudence. We have seen years and years of Modi ji, including in Gujarat and also now here for 11 years. So I see no reason for them to be deviating from the path of fiscal consolidation. Thirdly, obviously we have done a lot for consumption in the last 12-18 months, specifically last year's tax cuts, as well as the GST benefit which was being given. So a lot is already been done in consumption. So I would say logically this budget should focus on capex. And if I see the economic survey, the growth rate for this year and even for next year projected, it gives me a clue that the government will need to focus a lot on growth. And to maintain that growth, of course, you will have to do capex. So logically, the one item which one need to be watching in this budget will be the capex. What is the capex allocation which the government is doing? Tamanna, there one more thing which I would like to mention. See, this PLI scheme, according to me, which I've been saying for a long period of time, has been a big super hit as far as the electronic sector is concerned. So one will hope that this is being extended to many new sectors in years to come, and this becomes, and government ke liye bhi this is like a neutral. On one hand they give the benefit, on the other hand they get it by way of GST, by way of income tax, by way of so much indirect benefits. So it's not like money going out of their pocket. In particular, I would like to see what are they going to do to encourage really data centers to come in India. Because that is one thing which we are kind of lagging behind the world, the data center capacity which is there in India. And what is needed, there is a large gap. And if there is some kind of a real incentives which comes even by way of, let's say, the tax benefits being given to the income generated by data center, those kind of things will encourage a lot. And we could see, and this is not data center alone. See, the growth of data center will mean enormous amount of growth for a lot of hardware companies, enormous amount of growth for power companies, and our data remaining here only. So in particular, this capex and data center are two things which I am at least watching, apart from fiscal consolidation, which we spoke.
Yeah, Mr. Kela, you spoke about we'll get the best for our viewers during the day. We are starting with right now with you being there, right? So in some sense, we're starting off with getting the best people right at the start of the market, and it's a new look Madhu Kela. So interesting to see that. I know that you do a lot of work on the numbers with your team, right? What is the one or two key numbers, Mr. Kela, that you're watching out for in this budget announcement? It could be around capex, it could be around the debt to GDP, fiscal deficit, whatever it is. But what are the one or two key numbers that you're watching out for?
So, Neeraj, if you look at the numbers on the revenue side, even for last year, the numbers in a way will be falling short both on revenue, and I would say lot of expenditure saving has also happened in the last year. So if you look at like that Jal Se Nal scheme, the money is not being spent only. So on one hand, you have lower revenue because of the tax concessions which are being given, nothing to do with the tax buoyancy, but the tax concession and the GST concession. That will lead to lower number. And also, but there is a lot of saving in the expenses side as well, both on the capex as well as some revenue items. One more thing which will is like a positive surprise for last year number will be the dividend from RBI. Which whatever we had estimated, I think it will be at least 40-50,000 crore higher than what was being estimated from the budget last year. So I would say overall the government broadly must stick to the number which they have already said. One notable item of growth in the current year itself is a 56% YOY growth on defense expenditure. Already happened. So that is kind of already setting up the tone for what is likely to come in the current year. You know, we have already done so much, and I am sure a lot is there on the pipeline. Going forward to next year, Neeraj, again, I would say there are
Mr. Kela, allow me. Mr. Kela, please allow me. The market is just about to start. So the going forward point is something that we will love to hear from you immediately post market open. We'll do a quick market open and then come back to you, Mr. Kela. Please stay on. But the pre-open session is flat. One would argue probably that until the budget speech is out of the way, don't expect too much of excitement, but watch out for some of the metals, some of the result reactions. This morning, on this Sunday morning, I must say, a flat start, absolutely flat start. Banks are okay, but mid-caps are down. Let's get the Nifty Metal Index for a moment and then get the heat map up on the screen very, very quickly. The Nifty Metal Index should come up on your screen. Small caps are down 0.6%. Metals are down 3.7%. No surprise here. Let's get the heat map up on the screen. You'll probably see some metal names here as well. Hindalco down 5%, Tata Steel, JSW Steel. By the way, the steel stocks are not that badly impacted, but by virtue of the fact that the tide is lower, all boats are lower along with it. Adani Enterprises in the same camp as well. Eternal about 1% lower. Adani Ports, Infi, Coal India are amongst the others. So metal stands out as the worst performing index. More red than green. What is in the green? Sun Pharma, good results. The acquisition overhang remains, but the results are good and the street is rewarding that. Bajaj Auto again on results. BEL, HDFC Bank, SBI Life and ICICI are amongst the others. Tamanna.
I think you're going to see, Neeraj, maybe a bit of weak volumes in the beginning. Not everyone maybe is up this Sunday, or maybe they'll tune in a little later. But nevertheless, flat to negative start on the indices. I want to pull up the Nifty contributors before we get to the broader markets. This morning, I'm wearing green in the hope and anticipation that the budget and the markets will have a positive outcome. HDFC Bank pulling up the market. Sun Pharma, ICICI Bank. I think private bank space is something you need to look at very carefully on the losing side, as Neeraj has recapped all of the steel stocks coming in. Let me pull up the small cap and the mid cap indices for you and just take a quick look at what's happening with the broader markets. The mid cap 150 actually even deeper in the red. The small cap 250 nearly a percentage points down. We'll pull up the look at the advanced decline as soon as that data is available. We'll show it to you as well. But right now I want to okay, there you have it, and it's not looking that great as far as the Nifty is concerned, but on the NSE it's even Steven, not that badly skewed to the negative. Let me pull up the sectoral heat map and just give you a sense of what's happening there. No prizes for guessing that metals will be the worst hit index, 4.5% in the red. We should pull up those internals. And remember, this is the crack which has happened globally. The screen is largely red. India defense is what is working. Okay, there you have it. Hind copper 16%. I mean, sunk is the only word I can use for it. Hind zinc 10%. Vedanta about 8.5%. Their OFS could not have come at a better time, I must say. Nalco, Hindalco, all of them. APL Apollo is the only one. I actually want to go back to the sectoral heat map for a second if we can, because while you had metals doing terribly, all through the time, you have only pharma doing okay. And I want to look at what's happening to Nifty Defense. There you have it. This is the budget bet, and we've been saying this all along, that India will have to get more self-sufficient on defense, and this is maybe where the spends will come in from. I'm going to pull up individual stocks and see what's happening there. We already spoke about Sun Pharma, but let's take a look at how Sun Pharma is faring and continuing to fare this morning if we can. We also want to look at BSE. Remember, BSE, CDSL is the other one to watch up there. Okay, Sun Pharma looking pretty good over there. Sun Pharma 3.5% up. Meanwhile, I just want to take a look at BSE, CDSL. They have a nod from the NSE has got a nod for its IPO. What's happening there? We'll take a look at that. And all of those other prices completely off the rack when it comes to your metals. Actually, go back and pull up that BSE 500. Let's just look at the gainers and losers and look at what's happening this morning. Where there you have it. I mean, complete meltdown. MCX also 10% down. Remember, MCX is trading. People are going to be trying and selling their positions today. So that's going to be where the pain is. Not a great start to the markets this budget morning, but we can only hope the finance minister gives us something to smile about.
You said it, Tamanna, and of course quite a bit of the fortunes of some of these stocks could change quite dramatically based on what is announced. And Madhu Kela is in conversation with us. Madhu, you were making a point just before the markets opened about the way forward and what your thesis is. You want to complete that point?
Yeah. So the three numbers, according to me, watch for will be I'm now talking purely from the government perspective, that what is the total gross revenue estimate which they are going to make. In my view, it should be close to 43.5 lakh to 44 lakh crore rupees. What is the total expenditure which they are going to make? It should be in the ballpark of 53 lakh crore rupees for next year. And the gross borrowing of around 16.3 lakh crores and net borrowing of around 11.7 to 11.8 lakh crore rupees. Now these are numbers which will give us indications about the overall market, about bond yields, about bank nifty and the way forward. So I would say, as the budget starts to come, watch out for these numbers. This will kind of set up the tone. So let us say, suppose I'm just giving an example, that instead of 43.5 lakh crore, if the revenue assumption is 47 lakh crores, then we know some of the other taxes are coming, right? So this is how at least I look at the budget and I analyze it. But these are three key numbers: borrowing number, the gross revenue and gross expenditure. And of course, the fiscal deficit which they speak in the beginning itself.
This is why we love to speak to you, Mr. Kela, because you're able to look at the story behind the numbers. And I think we'll have that perspective as well when we look at those numbers when the finance minister announces it. Having said that, and I just want to ask you about the context heading into the budget and of course the look forward into FY27 as well, which is that the earnings cycle has played out. We've seen half of it play out, right? So you might have gotten an indicator as to where things stand right now in terms of both the earnings picture and the valuation picture. In your opinion, there are pockets where a lot of people had previously said there was a challenge on the valuation side. Are you more comfortable with the setup heading into FY27? And are you out there looking very strategically to pick up more?
I would say the earnings are, a lot of smaller companies, earnings have been very positive. If you look at company by company, the results have kind of also surprised on select pockets. Of course, select pockets, they continues to be challenging. So if I look back, when the market actually started to correct on the small and mid cap size, that was maybe 1.5 years back when the correction started. And we have been very vocal that the valuations are stretched. But now let us look at 1.5 years have passed. Lot of stocks have seen correction of 30, 40, 50%. So that's another kind of event which has happened. And thirdly, now we are starting to look at 2027-28 number. After 6 months, let's say from June onward, we'll start to talk 2027-28 number. So if I look at from that perspective, I think valuation selectively has become quite attractive. The other point is that there is so much. See, the biggest worry for me, even last year and even this year, is not this, but the flow of paper which has come in the market. So market kind of absorbed 5.5 lakh crore rupees of new paper, which came in by way of new offerings, which came in by way of sellings from private equity guys, which came in by way of selling from promoters. I also expect this year also that number to be reasonably high, because we track the number of DRHPs which are being filed and waiting for market to hit is more than 200. And we are mother of all IPOs waiting this year, which will be NSE, which will literally have kind of 100% free float. Which in my opinion will continue to put, directly or indirectly pressure on the secondary market. So my overall thesis for the next few months is that there is going to be very little interest in the smaller names, because a lot of larger mutual funds and larger investors will be busy watching where they could deploy a large capital, which will leave the smaller and mid cap segment kind of relatively neglected. And that is where I think the opportunity is coming, or rather will get more accelerated in months to come. And at least as far as I am concerned, that is one space which I am focusing on, making our list properly, doing our research to the next level. And if the market does present opportunity, then we'll press the button.
Mr. Kela, a theme that we've been discussing and we think will be big in the budget as well is how India can be protected from what is happening around the world. So a bigger focus on import minimization, self-reliance, making supply chains more indigenous. In that Atmanirbhar portfolio, and this is the question that I've been asking, where are the opportunities there? Have you started already looking at companies from that lens? That is this company going to benefit from government policy to make sure that we are secure, whether it's minerals, defense supply chains, or what you may have it?
Tamanna, we call it strategic autonomy, and this is one subject which has been very favorite to my heart, and we've been speaking about it for last 2 years. In fact, Singularity had a conference last year, and the whole emphasis was on strategic autonomy. And there are 8 or 10 sectors wherein we are still dependent a lot on imports. So I think government systematically has been working on it. Electronics was one sector, and you will see whether in budget or off budget. See, the beauty of this government has been they are not waiting for one big bang budget announcement. You just imagine if all the GST cut which was announced in the middle of the year was part of the budget, it would have been like a big bang budget, right? But it's like a budget happening through the year. So one thing is very, very clear is that they are all out to support Atmanirbhar Bharat. They are all out to support strategic autonomy on these sectors. So these sectors will continue to get government policy support, and it will get, in my understanding, more and more accelerated. Let's say for something like medical equipment, it's a large business, around $12 billion at domestic consumption. It's still 75% is imported, right? So the sectors like this will clearly see how we can manufacture more and more in India, how the government can support some of these sectors, and how we can become self-reliant. And critical mineral will again fall into the same category. So Tamanna, we have identified 10 sub-sectors within strategic autonomy and are very methodically working and investing in companies which will benefit even in private domain out of these sectors.
What's the next leg? What's the next leg which we could see a glimpse of in this budget maybe, or outside the budget as you mentioned? Because we've seen that import substitution or reducing the dependence on imported mobile phones, for example, or electric components. What is the next leg?
As I said, that it will be critical minerals, it will be data centers, it will be medical equipment, it will still be other components of electronics, it will be some parts of garments, textiles, wherever we are still kind of in a minor way still dependent, or these are items which could also be exported in a big manner. So the list kind of is long. I'm sure all of it will not get and cannot get covered only on the budget. But what we are seeing, even for last few years, there is a systematic approach of the government to really address this in a very serious manner. So I just give you an example. Like we spend more than 5 lakh crore rupees on shipping freight cost out of India, which is inward as well as outward. these are estimates, so don't go by my number, but it's a very large sum of money. Now, this is one sector which is not yet got government attention. Should it get a government attention given their overall intention? Should we encourage shipbuilding as an industry in India? Should we not save all of this foreign exchange which we are actually paying to foreign shipping companies? Now, as a direction, I am very clear. Now, whether it comes in this budget or it comes during the year or it comes next year, but given the intent of the government, some of these long pending large sectors where we are spending a lot of money by way of foreign exchange will get government attention, and in due course of time this will get addressed. So the important thing for today's discussion is not whether which sector will get filled up. The important thing is what we have to watch for the government intent and the direction about strategic autonomy as the overall subject and what the government is showing as an intent in this budget.
Madhu, important points that you're raising, but I just want to take that forward a little bit and to say that you've already identified 8 sectors is what I heard, right? Where this will play out, this strategic independence. I'm wondering about what your anticipation of requirement for creation of capacity is, and whether significant capex needs to be spent, and whether opportunities will present themselves therefore in the funding of those opportunities as well.
Yeah, it is already happening. That's the point which I'm trying to make. That there are, like what you saw, electronic sector is the best example of how the government and the private sector has worked together to create a large industry which was kind of completely non-existent even 10 years back. And so many beautiful companies came across, and billions of dollars of market cap got created. All I'm saying is that will get replicated in many more new sectors. And today is the day to watch the intent of the government towards it. Rather, I would not be very excited only about a specific event, but a specific sector, what they do. But I would be watching for the overall strategic intent of the government.
Mr. Kela, just stay on, because we also have Amitabh Chaudhary of ASSOCHAM with us, of course, and needs no introduction. But I just thought it'll be lovely to get a set of one answer from him and get your opinion on that point as well. Mr. Chaudhary, great having you. Thank you so much for taking the time out and being with us. But we're talking to Mr. Madhusudan Kela as we just before we came to you, and he was making the point of Atmanirbharta, and he was making a point of how borrowing costs, if they come off, will be a big tailwind for the next 12 to 24 months. I wonder if you believe this budget has the opportunity to make a difference to the borrowing costs in a meaningful way.
Well, I think the Reserve Bank of India has done quite a bit over the last 12 months in terms of bringing the overall borrowing costs down for the economy. Given where the inflation is, given the targeting which RBI has in mind in terms of inflation and how does it link to the overall interest costs in the economy, I don't think there is more scope left to bring the interest costs down. I think at these levels, with the cost of capital also coming down meaningfully for Indian corporates and Indian economy, I think the push has to be what I heard towards the end of what Mr. Kela was saying, that the push has to be directionally where the government wants to push the reforms, push investments, and ensure that India starts emerging as a real competition globally in some very specific sectors. We are not competitive enough in many sectors globally, and what the government can do to help the economy emerge in some of the other areas would be very, very important directionally, at least from this budget. So I'm looking forward to actually government pointing us in that direction. And obviously there are a lot of commentary which is happening in the markets and by various commentators, including Mr. Kela, about specific sectors where they expect government to push the agenda.
And just, Mr. Kela, one last response from you to that point, and then we, of course, thank you and continue a conversation with Mr. Chaudhary. But Mr. Kela, you want to respond to that?
No, I think what Amitabh is saying is is absolutely in the right direction, and we are making a similar point that the government intent has been to reduce the cost of funding. What I was referring was to look at the absolute borrowing which they will do only from the budget point of view, and that is only the today's event. That so I was just only specifically referring to the number. But on this overall subject of Neeraj, on the overall subject of strategic autonomy, the government has made a lot of moves in the last few years, and one would expect them to continue to make moves, and the budget should only be an event in that direction to give direction to the overall entrepreneurial class that they are really serious about it, which they have been. So I would just be watching for a larger intent rather than it being an event.
Madhu, thanks so much on that note for joining us, for speaking to us this morning. Absolute pleasure as always. Mr. Chaudhary, I want to double down on the point that you were making, and also to ask you about what do you think trajectory of lending is going to be in the country? Because we've been focused on, or rather the government has been focused on bolstering consumption. We're wondering what the thrust will be. Because so much has already been done, is it possible that a shift might take place to focus more on capex in the relatively near term? And what does that mean for banking sector growth and lending rates, or rather lending growth heading into FY27?
So as Madhusudan said, directionally, obviously, we are looking for, from the government, some indication on what the capex growth would be. People are expecting it to be a double-digit number. But, what the government can do to push capex growth even higher than where it is today is something we are looking forward to hear, from the finance minister. Now, if the capex growth does come through, if some of the reforms which they talk about do push that capex growth, it's good news for the banking sector, because ultimately that will lead to higher credit growth. Now, people are already projecting 15 to 17% credit growth, obviously looking at both the wholesale and the retail side. But it also then has to be followed with deposit growth. And there obviously has been some commentary around what the government can do to allow the bank to continue to, grow their deposits at a certain pace. Because at the end of the day, credit and deposit growth also has to converge. So from my perspective, yes, we have to push the economy, GDP at a certain level. It has to be integrated with a certain amount of capex growth. Credit growth will follow. But then the credit growth is not possible on a sustained basis if deposit growth is not there. So all of them are linked.
I also want to ask you, Mr. Chaudhary, about the smaller entities, right? And the health of those smaller entities, especially those that are facing the external side. Is there a requirement to provide a little bit of a room, either through a moratorium or certain other options by the government to help them tide over what is clearly a difficult time?
Well, government has already done some, in the sense that they have provided some incentives, especially for companies who are suffering because of some of the tariffs which have been imposed by US. Government is also working very hard to ensure that they can sign free trade agreements with as many regions, countries as possible at a very, very fast pace. I think there is a clear request from the industry at large that the government, their guarantee schemes have been very successful, that whether government can enhance some of those guarantee schemes, not only to support the industries or MSMEs which have suffered as a result of some of these geopolitical issues, but also MSMEs at large. How can we grow that sector in a meaningful way, and what role government can play to actually support those MSMEs? So government has obviously pushed various finance platforms. Government has been pushing MSMEs in general, giving them all kinds of incentives. They've expanded the definition of MSMEs. But my view is one another area where a lot more can be done and has been done successfully is just building up on what already is in place, is to come up with guarantee schemes which can support these MSMEs in a meaningful manner in various sectors of the economy. Right now, the focus seems to be sectoral reforms where India can emerge as an important player globally. I think MSMEs will have an important role to play. So some of these identified sectors, I think MSMEs do need to be supported. So I'm hoping that directionally government will do something in that area.
Amitabh, hi, Tamanna here, and we had this conversation about budget when we spoke in Davos as well. The thought is that the government should stick to its fiscal targets. But is it time to maybe give them a little room for capex to come in? Would you say that growth needs to take precedence?
I think, all of them are important. Fiscal consolidation is important. Again, maintaining certain policies in terms of taxes is very, very important because, directionally you're giving a very clear signal to the investors at large that you can expect things to be steady and moving in a certain direction as it has been enumerated by the finance ministers many times over the last couple of years. So you don't want, or suddenly a change because you are pushing something. Give government credit. I mean, we didn't have to wait for the budget. They have done a lot already. And that's why expectations from the budget are low because in terms of opening up and in terms of pushing various reforms, in terms of giving, the GST benefits, in terms of some of the taxation benefits, they've done a lot already. So my view is that directionally government should continue to consolidate, but at the same time, the size of the budget is very large. Can they push capex? Can they push, give some incentives in certain areas where government is actually not spending, but will kind of, give some revenue away over a period of time? Is still possible. So I think both are possible. We don't have to sacrifice one to achieve something else.
Amitabh, thank you so much for speaking with us, and we hope to hear from you once the budget is out as well, and what your view is on what Finance Minister says. We're going to take a very short break, but I just want to give a sense of what's happening in the markets right now. Look at the IFCI stock. Now, this company has about a 4% stake in NSE. That could be one of the reasons why you're seeing IFCI up and about today. Data patterns, Jupiter wagons. We've been talking about the theme, the budget theme. NTPC Green Energy could be another one in those budget themes. Swiggy is up and about. Maybe they're hoping for some boost to consumption. But really, the losing side is where the news is. MCX is 15% down right now. One of its worst single-day falls since COVID, as our ticker is telling us. Hindustan Copper crashed 14.5%. You're seeing Hind Zinc, Nalco, all of them, Muthoot Finance, even as gold prices are continuing to tumble. So a lot that we need to unpack on the markets as well, but we're taking a very short break. On the other side, the big names continue. Stay tuned.
Budget 2026, the growth agenda.
The NDTV Golf Pro-Am, in partnership with PGTI, comes to you from the heart of South Mumbai at the historic Willingdon Sports Club. The city's classic layout provides the ideal canvas as India's finest golfers share the fairways with the country's top corporate leaders, Mumbai style. Watch at these heights.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम
Budget 2026, the growth agenda.
Back with India Market Open ahead of the budget. What about an hour and 15 minutes left, and two experts with us joining in. Two important market voices: Manish Sonthalia, Director and Chief Investment Officer, MK Investment Managers; Ajay Srivastava, MD of Dimensions Corporate Finance Services. Gentlemen, both of you, thank you for joining in. Thanks for your patience. It's just that kind of a day wherein conversations tend to spill over a little bit. But I'm just trying to understand, Manish, as we head into this budget, are you constructive, or do you fear that no big bang announcements might lead to a market sell-off?
No, exactly. As like any other budget, a lot of expectations built into the run-up to the budget. But if you look at it practically, what are the things that they can do given the situation that we are in? So, not too much of expectations going into the budget. Markets will watch out very carefully as regards any alleviation of the problems of STCG, LTCG and STT. If that comes through, many of the things regarding the problems in the stock market could be taken care of. But otherwise, if it's run of the mill, like you have a 4.2% fiscal deficit, nominal GDP growth of 10.5%, a gross borrowing number is the key number to be watched out for. 16.5 lakh crores and beyond is going to be taken very negatively, and anything less than that could be taken positively. Capital expenditure, 12.5 lakh crores, defense, 7.5 lakh crores. These are all known numbers. Nothing is going to surprise very positively. I think the only thing which could surprise very positively is some consideration on capital gains tax from a foreign outflow perspective, because these are the guys who are selling. And if this doesn't come about, the trajectory on the downside could continue. Of course, there's high degree of margin of safety as far as the valuations of the market currently are concerned. I'm not too negative, but you could see a sell-off if these things don't come.
Weigh in on that. Is your mood buoyant? Are you positive, or are you cautiously optimistic? What's the view?
At around 25,000.
No, I'm talking about Ajay. Ajay, you want to weigh in on that? Is your mood buoyant? Are you optimistic, cautiously optimistic? What's the view?
Well, our mood is optimistic because I think the government has done a lot in the last 1 year. Unfortunately, it has not worked on one principle. Biggest one would be the FDI, FPI, because that's a critical piece for Indian economy. That's not worked. And I think that's where we are looking at the budget and saying, is there going to be structural changes? Is there going to be difference in approach to this fact? That's one. So FDI and FPI reversal steps, that's the one big priority we are seeing. And we're optimistic that something will be done for that. And of course, the next one is we are optimistic about the change in PSU banks. I think the approach to PSU banks may change. I don't think they'll privatize, but I think the approach will change, and that's going to be very constructive for both the index and the market, as well as for the Indian lenders and the people, because I think having competition in the banking industry with good quality PSU banks now modernizing, that would do wonders. So I think two places, FDI, FPI, and PSU banks, I think there are two big pillars. I think we are very optimistic that you could see good steps coming through, and we should positive outlook for that one.
Okay, you're seeing pictures of the finance minister outside the steps of parliament, where she will now proceed, and then the budget session, which has begun, will see the whole process of Finance Minister Nirmala Sitharaman presenting the budget. You can see the chief economic advisor there on the top step as well, and the entire team that has gone through this process of presenting the budget this year. Surely not an easy one. I mean, no budget is easy in a nation as complicated as ours. There's always balance to keep, but this one is particularly difficult. I'm wondering, Manish, I'm going to come to you first on this. If there is no long-term capital gains relief, and it may not be there, if there is no tinkering at all with tax, but more of a broad messaging on where the country is going, would that be seen as a negative by the market, or would there be a sigh of relief that at least nothing has been done to disturb the status quo?
No, I think if, it's not going to be anything big bang, then I think the trajectory of the markets would be what it is today, negative. So you could see a continuation of a sell-off from tomorrow. Of course, valuation comfort is absolutely there. The negative runoff could be there for a day or two, and then people will weigh in the positives and negatives accordingly. But I think the trajectory, a big bang reform could be on the capital gain side. If that is to come about, then FIIs will feel a sigh of relief. You could have the FII flows get reversed.
Rahul Arora, CEO of Ashika Institutional Equities, also joining us this morning. Rahul, very good morning to you, and thanks so much for taking the time. I'm going to start with a non-budget question, though. I'm going to start with a pack of stocks that is toppling like a house of cards, and that is the metal pack. What would you say about what we're seeing right now? Is it really par for the course based on the underlying, the way that it's moved? Or do you think that there's more at play here? It could settle, it could go up again?
Morning, Alex. Thank you for having me on the show. I think the short, humorous answer to your question would be either get an oxygen cylinder or sit on the Ferrari Rosso in Abu Dhabi. I think if you can manage either of those, you're going to manage this. But I think, what's happened in the metal sector obviously is a bit of an extreme. You could argue that the run-up itself was a bit extreme. But typically, as you see in stock prices as well, these things tend to stabilize after the kind of move that has happened. Of course, the news flow around the new Fed, etc., have, not aided in terms of sentiment, but I think the kind of run-up that had happened, I think it's just par for the course. Would I be a buyer in these stocks? No point catching a falling knife going into the budget. Let's see what the reactions post the budget are, but I think we could be close to the end of what you have seen, both on the underlying as well as from a stock perspective.
Okay, and I'll take a question to Ajay, of course, but Rahul Arora, congratulations on your new role as well. But Ajay Srivastava, coming on that, I mean, just the volatility that we're seeing across asset classes, but particularly metals, right? And that has a big impact on, well, household savings if you've not sold your family silver, but on the stocks as well. How do you look at this? Because it's devoid of what the budget can do for them any which ways, the metals pack.
I think what's happening out there right now is, of course, as I'm not too sure, the MCX has just changed the margins on all the silver and gold. They've increased the margins. So it's a very peculiar situation. They've increased the margin on a Sunday, but I think both silver and gold are in a circuit. So at the end of the day, I'm not even sure what an investor can do. So I think let's be honest about it. These investors have been taken for a ride by global institutions, which engineered the collapses thing. And today, institutionally, what do you do on a Sunday when you change the margin norms for investors and the market is at circuit? Then what do you do? So I think there's no fundamental left to analyze anymore. I think it's a question of the regulatory overhang on this both the products at this point of time. And as an investor, you just have to sit and watch and see what's happening, because the call is not on fundamental RSI, demand, supply, anything. The call is, can you put in the margin, 60% margin today on a Sunday and keep your holdings, or do you cut? You cut, but you can't cut because it's in a lower circuit. So I think, this is a peculiar situation where institutionally the actions of regulators, both overseas and India, have led to the point of a collapse of a product and a diversification of asset, which was working sensibly for investors. Now, can you ride through it? The answer is you should be. If you can ride through it, I think you will gain. But the question is, how do you survive on a Sunday with margins and open positions and circuits? So long-term makes enormous sense. Rupee is depreciating. We don't produce silver too much. We don't produce gold at all. And therefore, long-term hedges are relevant and should be there. At what pricing? Your guess. But the question is, can you ride today and live for another day tomorrow?
Ajay, apart from the pain for anyone who has taken positions in silver and gold on MCX, just focusing on equities and what's happening as an impact of that with Hindustan Zinc, Hindustan Copper, and all of these counters sliding down. Once the dust settles, are these now attractive, or could they be attractive at some point, or would you stay away from the entire metals pack for now?
Oh, no, not at all. I think metal is a good place to be. I think historically, if you will see last budget to this year, they have been the best performing.
Yeah.
We believe they will be in the top 3 performing again, because simple fact, they are monopolies at the end of the day. You can't produce an overnight, you're going to mine. Number 2 is globally the prices are benchmarked in dollars, and if rupee continues to depreciate, you will see the natural increase in the prices of the commodities. And the third part is all these companies in India, by and large, are pretty well, apart from maybe Hindalco, but perhaps they hardly have the kind of debt which can create an overhang on them with good dividend paying record. So I think fundamental story of metal remains strong. If India has to grow, you need metal at the end of the day. And these are non-ferrous. Non-ferrous is the most precious commodity in the world today at the end of the day. I'm not talking of steel as a metal at all, but I'm saying non-ferrous, aluminum, zinc, copper, all these are required for the new age industries. So you can't live without them. So yes, temporarily live out of this one. But our belief is again for the next year, when you sit there next budget, you will find these will be in the top 3 performing indices on the Indian market.
The view on metals and defense this morning, Manish.
Yeah, so Tamanna, see, one thing is for sure that a portion of your wealth should, or your total asset allocation should have a component of gold and silver. But having said that, the other base metals, the industrial metals like your copper or aluminium, we need to understand one thing. If the prices of these metals go way beyond what it is historically, or whatever there has been the movement historically, demand gets destroyed. So if you're using copper for AI and data centers and electric vehicles and renewables, all of that is understood. But if the prices go way beyond levels, what is being projected, let's say 2040, there's going to be a massive shortage of copper. So copper should be going up. In the interim, you will have postponement and destruction of demand. Similar, and aluminium is a substitute for copper. So if copper goes up, then aluminium goes up. Of course, there is again going to be a postponement of demand. So I think immediate prices of metals really don't translate into earnings per share of the underlying securities. I think the best play out here is to question your assumptions on the pricing very carefully and then see where is the value. In today's context, I see value in Vedanta, which is a play on Hindustan Zinc, which is a play on, let's say, aluminium prices, because they have a lot of 60% of India's aluminium gets produced by them, plus the demerger story, etc. So, but on the other hand, let's say Hindustan Copper, if you're assuming that the prices are going to go way beyond what it is today, what is the total mining capacity? 4 million tons going to 12 million tons by 2031, and 1% concentration translating into, let's say, 1 lakh ton of copper by 2031, and you give them the EBITDA multiples, still does it make sense? So these are the questions to answer rather than just taking a proxy play on the metal prices on a day-to-day basis.
Answer though, Vedanta may be something to look at. There's a demerger at play too, so keep that in mind. By the way, next sets of guests about to come in, Ashish Somaya and Anirudh Sarkar, so watch out for that as well. But bring in Rahul Arora in this conversation. And Rahul, we started off with a non-budget question, and at the onset, of course, Rahul, congratulations on this new role as well. But from the budget, Rahul, in specific, do you expect to get a winner the way you probably praying for Novak Djokovic's victory today?
I don't think I'm praying for anything more than Novak's victory today, Neeraj, sorry. See, we're all brothers. But no, I think, Neeraj, I think she has a very tight rope to walk. I think post GST cuts, the indirect tax collection has been low. So we're looking at a tax collection of about 9-10%. I don't think she can look at capital expenditure more than that number. So it's probably going to be 9-10%. Obviously, the big kicker that people are expecting going into the budget is the defense spending because of what's happening geopolitically. I think defense spending was up by about 57% in the current fiscal year. On that, it's projected to grow by about 20%. I was listening to Manish a little earlier. I mean, if you get anything on FII taxation, obviously you have a case where the Nifty between today and tomorrow could be up 1,000 points. But I think the probability of that is extremely low. But I think she'll probably walk a tight rope. She'll probably talk about 4.2% fiscal deficit, the roadmap for debt to GDP at 50% by FY30. But I think, at the margin, she may do a bit for the tariff or export-related sectors in terms of credit subventions or credit guarantees and interest rate subventions, and maybe PLI extensions. But there's not too much headroom post the income tax, extensions last year and the GST cut. So also, Neeraj, we have to keep in mind that India as an equity destination today is not the most attractive in the world. I think, if you're looking at a 12-13% kind of earnings growth for FY27, and that's the kind of return that you're expecting from capital markets. Your rupee depreciating by 4-5% a year from an FI perspective, you're already down to about 7-8%. You add to that your 12.5% long-term capital gains tax. You're getting the US 10-year bond yield at 4.5%. Safest asset in the world today, what Ajay was saying in terms of strengthening dollar. So why do I even look at India if post my taxes and post, rupee depreciation, I'm getting only 6.5-7% for a couple of percentage points. Even from an Indian standpoint, Neeraj, I think the way gold and silver have rallied, there has been an allocation shift in terms of people's portfolios. People who were probably 75-80% equity have probably dropped down by about 10-15% to alternate assets. And I don't think this fall is going to shake them because of the kind of run that you've had. So I think she's going to have a tight rope to walk, but I think we need to be a little pragmatic about the kind of returns that we can expect from the stock market. I think this is going to be another year where the Nifty probably goes to sleep between 24,000-27,000 at best.
Oof, it's feeling like deja vu because I think we had the same conversation a year ago. But thank you so much, Rahul, Ajay and Manish for speaking with us on this leg. We're keeping it fast and furious here this morning on NDTV Profit. Ashish Somaiya, CEO, Whito Capital AMC in our studios. Anirudh Sarkar, co-founder and CIO of Equinova Investment Managers, also joining us live in the studios. Welcome, gentlemen. But I also want to introduce to the conversation Nilesh Shah this morning. And of course, apart from market veteran, apart from Kotak AMC, wears many hats and also has an insight into how the Prime Minister's Economic Advisory Council is thinking. So a very good morning to you. Nilesh bhai, I'm going to start by asking you about your gut feeling. Is this budget going to be focused on pinning down the point that India will continue to be resilient in the face of what's happening around the world? The focus is in Delhi, but one eye on Washington this time?
Undoubtedly, budget will have to, Tamanna, take care into account multiple things. While domestically we are doing reasonably well, the future looks uncertain because of geopolitical uncertainty. And undoubtedly, budget will look to take steps which can ensure that our future remains as good as the past. And the best example yesterday was in the T20 match. We started with flurry and continued pushing the pedal to put 275 runs. We could have felt happy at 225, but that would not have been sufficient to win the match. The same approach we have to take in economy. 8% growth last quarter was very good, but it is still below our potential, and the budget should continue to lay the roadmap so that we don't feel happy we are the fastest growing major economy, but we actually go into double-digit growth where our potential is.
Absolutely. Nilesh, by important points that you're raising. To the gentlemen in studio as well, I think there's an opportune moment to ask both of them what they think as well. And let me start with Anirudh Sarkar. Anirudh, we've spoke not too long back actually, and you were talking about the earnings cycle and all of that, but specifically on budget and possible announcements that could be made today. Are you expecting anything big bang or more of the same?
I think, we'll see basically what we have been hearing over the last 1 year. I think will be a continuation of that. I think government will be focusing on more of the domestic infrastructure building. And I think one thing which has become very clear after the recent set of events internationally, you have to have your defense very strong. I think defense will be a very big focus area. And I think along with that, domestic capex, infrastructure building, and I think focus on how to boost the consumption. I think these will be the major drivers.
Yeah, most certainly. And we'll watch out for that as well. Nilesh bhai, just before I get a comment from you, Ashish, very quick initial thoughts.
No, I think that, I'm more in Nilesh bhai's camp. I think that while domestically we are doing well and we may have a lot of expectations, but I think there is like this whole cloud of what is happening outside. So for instance, let's say you have a great budget and everything that Anirudh said, let's say it plays out. And then next couple of days, there is some news about US earnings and the whole AI thing or, something related to US economy or the new Fed governor making some pronouncements. All of this will get
negated.
Clouded over. And so I think that is the bigger highlight to watch for. The external environment is the bigger highlight to watch for. Whereas as far as we are concerned, it's more just going to be a continuation of what we've seen in the last couple of years.
So then that's the question that comes in, right? And Nilesh bhai, if you would come in on this, right? Because you also mentioned that, to Tamanna's question, right? That there will be an eye out for what is happening in the world. I mean, what can the budget possibly do to manage that aspect while trying to focus on borrowing, fiscal deficit as a percentage of GDP, so on and so forth?
So Neeraj bhai, one very simple thing. All of us were troubled in entering the airport by standing in the queue. Sometimes our blood pressure was going up because flight was ready to go. and we were still stuck in the queue at the airport to enter. DG Yatra came and things changed. We need DG Yatra for investment, both local as well as global, both domestic entrepreneurs as well as global entrepreneurs. Like DG Yatra allows you to enter airport, this DG Yatra for investment in the form of a ease of doing business authority should allow entrepreneurs one-stop solution. Today, our entrepreneurs like Abhimanyu stuck in a Chakravyu. This DG Yatra should be able to break that Chakravyu. They should simplify rules, regulations. They should support entrepreneurs. If we can have DG Yatra for investments, both local and global, I think that can push us to double-digit growth.
Nilesh Bhai, if you were the finance minister who had to present today, and suppose you had not already fixed your budget, what would you do at a time when we need to, as I said in the morning when we started the program, Trump-proof India? We need to make sure that growth continues. We need to make sure our supply chains are protected. What would you do?
So I don't think so. I have the capability beyond what I am doing right now. But I will try to achieve trinity of impossible. One, continue to push investments by government as private investment is on subdued phase. Second, I'll honor my commitment of reducing debt to GDP ratio to 50% plus or minus 1% by 2031. While spending and maintaining fiscal discipline, instead of raising taxes, I will monetize assets, divest assets, or do some out-of-box thinking to unfreeze the savings which is locked in the Tijori of India to bring it into the bazaar. I will have no control over what happens globally, but I can increase the immunity of local economy so that it can withstand any virus thrown by geopolitical situation. A DG Yatra for investment and trinity of impossible. I'm sure this is worth attempting.
Nilesh Bhai, just wanted to get your perspective on bonds as well. And I know that you watch the bond market very, very closely. It has been said just today that maybe more than the equity markets for a reaction, a bond market reaction will be watched more closely. And so, therefore, let me ask you this. What will the bond market cheer in your opinion?
So undoubtedly today bond markets are closed, but bond market participants will be closely watching the net borrowing program. If net borrowing program is, let's say, somewhere around 11 lakh crore plus handle, that will give confidence to the investors. But beyond net borrowing program, a lot will remain with the RBI, the liquidity infusion, the rupee movement, and also global situation. If Fed raises rates or doesn't cut rates, it will have implication for Indian interest rates. But from the budget, the one number which bond market participants, including myself, will watch very carefully, what is the net borrowing program? Does it remain like current year in 11 lakh crore plus handle?
Well, Nilesh Bhai, as we wrap up, Ashish spotted a very interesting book onto your left, and we don't know you to be an angry person. There is a book on anger management to your right, rather. It's very interesting that you have that.
This is not for my anger management. It is a book by Ajay Bhai on India-Pakistan relationship. But thank you, Ashish, for noticing that nothing escapes your attention.
Good clarification. Excellent clarification. I think we need to go into the budget session zen today because
No, now it's psychology of money. It's fine.
Now it's psychology of money that we need as well. See, Nilesh Bhai, that's why we hope you come to the studio next time. We have a lot of fun here, and we'd love to have you here next time as well. And we'll have a quick word with you after the budget.
Anirudh, it is always fun. There's no doubt about it.
We will get your take after the budget as well, Nilesh Bhai, Nilesh Shah there. And I think we all need to get into a zen mode because think about it. Suddenly there's a declaration that we will now import from Venezuela. I don't know what's happening with gold and silver. MCX has recovered a bit that I see. For investors watching right now, And Anirudh, I'll come to you on this point. The confusion is, what do I do? Should I just right now shut my TV, no point even watching this? Or what is the kind of balm that the finance minister can apply? I think more of a role than any other is to apply a balm right now to the mindset of the money markets and to the people of this country.
No, absolutely. I think, if you look at the last 4-5 years, the budget really hasn't moved the market on the budget day because I think most of the announcements happen across the year. I think what the market is really looking forward to is something beyond the regular policy announcements. And I think this has been a big demand from the market. And I think what even Ashish was mentioning, that FIs are not going to come unless they find an incentive to come in India. And I think unless the FIs come back to India, I don't think so the markets are going to go back to where it was higher. So I would say some positivity in the market has to be infused. Some tax changes, could be some tinkering with the long-term capital gains tax. You could decrease the long-term capital gain tax. But I would say that some tinkering for the capital market is required. I know you're laughing.
I'm not laughing.
It's a wishful thinking.
No,
we always want it.
I'm not laughing at all.
No, I'm saying
because all of us have said it.
No, I'm saying,
But if there was any time to do it, it is now.
It is now. It is now. I think, you should do it because I think last year, India being the worst performing market, I think it's high time we understand the importance of a buoyant equity market. And the wealth effect is something, most of the households have a decent allocation to equity, and the wealth effect impacts the domestic consumption also. Wealth effect, when you see your portfolios going up, I think that's a very big factor which impacts.
I don't know who those people are, if you find them, who saw their portfolios going up.
No, I'm saying their consumption goes up when they see the portfolios going up. So the wealth effect has a very positive impact on the urban consumption. So I think some tinkering and some beneficial policies have to be given in the equity market.
Yeah, Ashish, just, to take that point forward in terms of, we've all talked about the defense, Atmanirbharta play. But do you think that there will be a consumption boost continuing, which maybe has not been penciled in yet by the market?
Yeah, I think, there has been a continuing thing. Like if you see every state election, there is some or the other, announcement that is going. You can also see obviously GST and income tax, and then now 8th pay commission coming. So I think beyond that, to expect something specifically in the budget might be a bit difficult.
Like the tax tweaks that they're talking about, joint tax,
the family
tax,
level,
etc.
I think that is more a convenience matter, really, if you ask me. And maybe it might add some because of standardization being changed or something like that, if you add both the family members. Plus, it's also a matter of convenience. For example, my wife is a homemaker. I never get any query, but even my wife keeps getting queries, right? So, combining it definitely really helps. The other important thing is, I'll just take on from what Anirudh said. We need to make the market as a destination, we need to make it attractive. And I think whether it is dividend tax, whether it is capital gains, and don't forget capital gains, short term is 20, but then you add the surcharge and the cess and see where it actually lands up, right? So dividends, double taxation, capital gains, there is an escalation, and then there is STT, I think, has gone up 4 or 5 times since the time it was originally incepted. So what happens is that we are making it unattractive, and sometimes people say that, okay, why will you make it attractive for foreigners when you are charging it to domestics? The point is they should be charged in their country. That is the key point. So, and like Anirudh said, last year we underperformed. Other emerging markets 30%. You see first 4 weeks of January, it's another some 15% or something. It's some crazy 50% underperformance in 13 months. The point is that while domestically we are doing well, from external perspective, we need to make ourselves attractive. And there has been a series of escalations in taxes over the last so many years.
So I have a follow-up there to Nilesh Bhai, if I can. And Nilesh Bhai, I wonder if you believe the taxation change can bring about a halt to that slide of underperformance. Is that a necessary condition, even if we know it's not a sufficient one?
So undoubtedly, returns in stock market comes from corporate profit growth. Stocks are slave of earning. Now, obviously, as an investor, if your earnings growth is, let's say, high single digit or low double digit, then taxation becomes very important. Investors will decide investment decision based on post-tax return. If you are taxing likelihood that their expectation of earnings growth will be higher, if you are not taxing, then the expectation of earnings growth will be lower. On the other hand, there is also an argument, why should we favor foreigner? Atithi devo bhava. આપણા ગુજરાતીમાં કહેવત છે, ઘરના છોકરા ઘંટી ચાટે ને ઉપાધ્યાયને આટો, એવું પણ નહીં કરવું જોઈએ. So the truth is relative. If our earnings growth can be improved by increasing GDP growth, then maybe we can live with higher taxation. But if our GDP growth is going to be lower, earnings growth is likely to be lower, then we need to make adjustment for tax. Ultimately, life is neither black or white, but somewhere in the gray. I hope in this budget, those FPIs who are tax exempt in their own country, like a charitable trust, endowment, pension, they should not be made to pay tax in India. There is a mindset issue. I don't pay tax in my country. Why should I go to a country where I have to pay tax? I don't have PAN card in my country. Why should I get a PAN card in India? So those kind of adjustments we can make by way of compromise till such time our earnings growth becomes more attractive.
Interesting comment there to make things more attractive. Nilesh bhai, on that note, I'd like to thank you for joining us this morning. Absolute pleasure as always speaking to you, and look forward to getting your views after the presentation of the budget as well. We've been speaking about attractiveness, and one space, and I think the mutual fund industry as a whole has been campaigning for this for a while now, is the treatment of tax on the fixed income side, right? We've seen the movement of assets under management shift very sharply away from fixed income, from the retail side in particular. And in this context of fixed deposits also being looked at, do you think that this is the time to do that, especially because you're talking about a capex upcycle possibly that needs to be funded somehow? The mutual funds have a large amount of money that they can deploy.
Yeah, so Alex, what is happening increasingly is that mutual funds have been doing a lot of fixed income investment through the hybrid funds.
Yes.
So you're right that in the last few years, we've seen interest rates slide quite dramatically. Like for a long point in time, 10-year bond we were used to swing at 9%. Now for a long point in time, we've seen it between 6 and 7. Now that's not going to reverse. So we have a low rate environment compared to what historically it has been. And then on top of it, there has been taxes. So as a result, what is happening is that, and I think the government has addressed, at least personally, if you ask me from the mutual fund side, I think the way hybrid funds are taxed and the way hybrid funds are growing, I think hybrid funds and multi-asset funds is the best way for retail investors to participate into equity, and where they're allowing the fund manager to calibrate and recalibrate based on attractiveness
without
of the market.
booking capital gains.
Yeah, so that's a fabulous construct we already have, right? Now coming to fixed income, that's debatable whether you should be, because ultimately it's not risk capital. So here we are debating that risk capital is being taxed at 20% plus surcharge plus cess, or 12.5. I mean, risk capital is already taxed at about 15% long term and 24% short term. So how attractive are you going to make risk-free capital? I mean, that's the whole point.